I'm going to break down gold for you in a minute, but I want you to observe this. So this is the last trade on YouTube, Throne Trades, Bitcoin breakdown. That was just like a day ago, and then the trade played out on the same day. So if you watch this video, you would understand exactly how we caught this move. So this is Throne Trades Telegram, this Bitcoin trade that we caught the sell yesterday, and all of this sell I actually explained it here. So you just need to check it out, and then you can know exactly why we sold. Now, today, right now, we're on gold, and gold is looking very good on the daily time frame. So there's a reason why I'm focusing on the daily. And the first thing you need to do here, mark your highs. Once you've marked your high, you realize that there is this high, 5,600, and then all the way to this other low here. So you mark your high, you mark your low. Now, let me explain why this low here is not an indication of a change of trend based off the daily. The trend is still bullish. And the reason why we're saying it's bullish, once we have this low, let's look left and mark other lows. So you just marked, I could mark all the way from here, but let me just focus on here. So we have a low here. This is an immediate low. So now for us to have said that the trend has changed, the market would have come to break this and then pull back to continue downward on the daily. That is when we would have said the trend has changed to a downtrend. However, the market didn't reach here. It got stopped from another low. So there's another low here. We can also mark it. And then we have another low here. We can mark it. So you'll ask me, how do I mark these other lows here? When you have a series of one-sided candles, in this case, you have bullish candles, predominantly bullish candle, and then inside those bullish candles, you have opposite bearish candles. That is your potential swing lows. In other words, some people call them demand areas. So when the market comes back from wherever it is coming back and reaches into this opposite candle place, it will react. There must be a reaction. And that reaction can actually break down or pull back. In this case, we've had a reaction that pulls price back. So right now, price is in between this low and then this high here. So the difference between this high and then this low is actually here. So we want to mark it now. From here, you want to notice that this is where price is currently, and we could actually have a reaction. But also I want you to mark, this candle here has created also another difference here. So right now, let's focus on how we can actually trade here. Now, number one, the trend has not yet changed based on the daily. That means we could actually have price breaking and then coming up to all these all-time highs here. Or we could actually pull back into this area. And then if we break this, then we can come back down. So this is the most important area now. So from here, I can switch to any time frame of my choice. So this is the 1 hourly. So on the 1 hourly, I want us to observe price here. Okay. In this zone that I've marked, this is the decision point. So the best thing you need to do now, you don't want to find yourself into trades anyhowly until the market gives you, this is the area. Once we break to the downside here, then we can look for selling opportunities. And then, because right now the market is bullish, so we could have a pullback into this, gives us a double bottom, a triple bottom here, and then the market breaks back upward. That is the scenario number one. Then scenario number two is when the market pulls down here, breaks this, and then does that. So the reason why we are still in an uptrend, I want to explain to you why this market is still in an uptrend, again, from the 1 hourly perspective. So if you see here, we have a low, and the market pushed up and broke this first lower high. And then from here, this other one was also broken. And then from here, you've seen this other high was also broken. And then we've seen this other high was also broken. So what I want you to observe is that when the market is constantly breaking the highs and not reaching the lows, we are in a bullish market. So you don't want to find yourself selling now, even though this is an area where the market could sell massively from, until the market also begins to break lows, like that. Then you can sell once this market gets out of this range. Otherwise, the market could pull back, but then breaks here. A strong break to the upside after pulling down here would also give us a reason to be able to buy upward. But don't forget, there's a price difference here where the market could also react, because the difference between this high and this low was here. And you can clearly tell here there is a high here. When the market reaches here, there will be a reaction. So this is how you just want to approach gold, with a lot of patience and then a lot of knowledge and understanding of the trend. So let's see how this plays out in the next 2-3 days, including NFP.